Good morning. It is a fascinating week this week, the week when we call it Liberation Day by President Trump. We're going to tariff with most of the rest of the world, basically half the tariffs they're charging back to us. But wow, a shocking surprise. Well, tariffs hugely impacted markets this week. Like May crude oil down $7.37, actually down $10 Thursday and Friday. Huge declines in the crude oil and energy costs. June gold, after making new highs for the week, down $79. Huge impacts on the dollar and some huge impacts on the stock market and some other outside markets. But actually, look at the grains. May corn actually closed up 7 cents this week. Made Chicago wheat up 1 cent, Minneapolis up 4 cents. Shockingly surprising. Many people thought the grains would be tanked, but the only grain that was May soybeans down 46 cents. Clearly, China retaliated on Friday morning, and so the soybeans went down the hardest. Most of that loss was actually on Friday. So a huge week for commodities, and actually, it becomes even more illuminating when you look at the charts themselves. You can see corn ran back to new highs in the May corn contract recently in February, and a quick downward spurt. Maybe we built in a lot of the tariffs here in corn because the corn market went down and tested those lows and failed to go below it, actually showing gains for the week. Surprising, big surprise. Of course, corn in the United States, a big domestic market. We only export about 1/7 of our corn. And so soybeans, obviously, the most export dependent, at least in countries like China. So we had a huge decline on Thursday and Friday. The soybeans had been holding their shelf of support, but we fell below that on Friday. We're probably going to test these lows very quickly on Monday. So interestingly, though, the grains are not reacting, other than soybeans, in a very negative way. And some of the issues is actually we're seeing a temperature forecast here after pretty good rains in most of the week. Temperature forecast where it's very warm here in the southern half of the country in the 8 to 14 day. We're going to have significant warming over the next week, and it's going to be fairly warm and dry during this 8 to 14 day, which would be about mid-April when we usually get started planting. So it doesn't look like, even though we had significant rains this week, that wet and cold forecast will continue. The wheat market did penetrate to new lows a week ago, but actually showing some gains this week. Now, you can't say this is a real bullish looking chart though, because we just made new recent lows last week. But the market was not as negative on these tariffs on the grain side that many people had expected. We also had a very good week of rain in the Corn Belt this past week through Thursday, Friday. Pretty good rain, even here in parts of the winter wheat country. There's still some lingering rain here through the weekend in Texas, especially, and in parts of Oklahoma, but a pretty wet week in a lot of winter wheat country. Even dipping in there to Colorado and up in Nebraska and South Dakota. So actually a pretty good uh, rain forecast that should have actually provided a lot of pressure to wheat. And actually we end up, maybe that's why we were making new lows the week before. But even though the forecast and the situation in grains should have gotten much weaker, maybe we're starting to think that some of these negative tariffs are built into the market, or mostly built into the market. Here we have spring wheat making a double bottom, but actually showing some gains this week too. These charts in the grains look nothing at all like some of the outside markets. Let me give you an example. Crude oil. Created crude, basically in this range here between $65, $64, and up here in like $78. And so we just traded up to the recent high as we got into mid-January and a new administration. And then we dropped down to a recent low when it seemed like we were going to actually settle that Ukraine conflict. maybe gain some back if Zelensky is resisting basically any types of peace. But look at what the impact of these tariffs are. Boom, Thursday, Friday, $10 losses. Holy cow, in the last 2 weeks, we've gone from $72 to 60. New lows going back into 2020. Some of the lowest prices we've ever seen in crude oil. Wow. Huge impacts on these tariffs on is it on the US economy, world economy? I don't know, but huge impacts in energies. We're going to have much cheaper energy going forward, and you wonder how long, are we going to continue down in the crude oil? Huge impacts there. Here we got the gold market running up this week to new highs, and then bam, tariffs. Boom, we drop we were at $3,200 midweek. We dropped to $3,035. We have a $165 drop in the last few days here, $80 on Thursday, I believe. So what a huge impact these trade wars that have been instigated by the United States on the outside markets, not the grains. Maybe soybeans, a little impact, but compared to what we're seeing on these other charts, the impact on soybeans, it seems like almost nothing. Here's the dollar. The dollar went, when it became more clear that Trump was going to win the administration and our stupid, reckless spending in the United States might come to an end. Trump takes inauguration here in mid-January, and obviously he isn't bluffing on these tariffs. So the dollar drops hard all the way down to 101. We almost retraced from the low of the year to the high. And from mid-October, we gained 10%. We lost almost all of that. But interestingly, the first day of tariffs, the dollar dropped over 1 point. And actually, we rebounded yesterday on Friday. So maybe not such a negative on the dollar. And of course, the Wall Street Journal did an article saying after the first day of trade, Thursday's trade, where we dropped huge, everybody said the dollar would get stronger when we're collecting these tariffs. Think about tariffs. We're actually collecting more money for the US government. And both the sellers and the consumers in the United States are paying those tariffs. They're split between whoever has more market power. But wow, the government is collecting that much money. You would think that the dollar might actually strengthen. Maybe it will in the end, but look at this decline in the dollar. The commodities get a whole lot more bullish, especially export-dependent commodities exporting out of the U.S. Think about this. If we settle these trade wars with more favorable terms for U.S. trade, and let me give you an example. The worst violator in the world of U.S. agriculture is probably Europe. The EU is screwed U.S. agriculture for decades and decades. So since 1980 or so, they shut off all imports of U.S. product. They tax us huge coming in because the price of their product in the world market is 2 or 3 times what the United States is. We can't export there, though, because they protect their market. And then when they overproduce for that stupid high price that they've got and more than they can consume in the European Union, they dump it on the world market to depress world prices more. U.S. farmers deal with world prices in the world. So the European Union is the worst violator. We get better trade terms, so we can get some access to that high-priced European market. Wow, United States agriculture would explode. But can we get access into those markets that we've been shut out from in trade for years and years and years? That is going to be very interesting. But if we solve this problem, these unequal tariffs in the world, the United States agriculture has a lot to gain. And if you think about this huge declining dollar, when the dollar gets cheaper, the U.S. ag exports go up, up, up. And it takes years for that impact to be there. But there's actually a very positive outlook for agriculture in the U.S. if we can get these trade things worked out, because U.S. farmers can compete on the world market much better than countries like European farmers, for example, can. So that could be very interesting. The other impact, huge impact we've had is the stock market. The S&P made a new high here coming into mid to late January. I've got a 3-year chart here. So look at the decline we've had since mid-January. Trump comes into office, and these past 2 days of tariffs, the U.S. stock market has probably trimmed 2,000, or the S&P, I guess, is here. The stock market, the Dow has driven over 2,500 points. But wow, look at the huge decline. You take these impacts that we're talking about here, the impact of the S&P, and look at the impact on the dollar. Look at the impact on gold. You've got some huge things happening here in these outside markets, and yeah, wow, the dollar, the S&P 500, and the S&P 500 over 30 years, and look at the impact we've having of these tariffs. This is like a monthly chart now. The last 3 months, the stock market dipping. These are normal dips, and actually a bit more dip here. We get, like a 30% dip in the stock market from 6,000 down to 4,500 or 4,000. That's going to be something that the stock traders are going to want to buy, but you have to be careful what you're buying. Nike stock, where they make everything in the rest of the world and bring it back. Probably not going to do very well. Domestic stocks, though, with the United States more favoring domestic products, could be a huge potential benefit. So you have to think about these market impacts and how they're going to be spread out. We thought, export dependent crops like wheat and soybeans would be hugely impacted. Well, soybeans was. Wheat so far, not seeing huge impacts. Corn market, more a domestic market, hardly moving. In fact, gains for the week. So this is a very interesting situation. The market, wheat and soybeans, have already built in this huge pressure on grains because of the expectation that tariffs would have a devastating impact. But think about the impact when the United States gets more favorable trading terms with its partners. Think especially about the European Union and the devastation they've been causing on agriculture around the rest of the world with their stupid subsidies, at 2 to 3 times the normal world price. We get better negotiations on these trade deals. Actually, agriculture could become very bullish. We've gone down for 3 years in commodities. And of course, while these tariffs are on, we're not going to go higher. We talked about how that is going to have a long-term impact. Trump is probably going to have to send out more Trump cash to farmers, compensating them for the impacts that, for example, the China trade war had on us the last time. I think they're going to do that. They've already said that in the administration. When this is done, when the trade wars are over and the U.S. negotiates better trading terms, I could become very bullish agriculture, U.S. agriculture. We've gone down in price for 3 years on these conflicts and our stupid foreign policy in countries like Ukraine, where the United States basically provokes war and then uses our war machine to kill a lot of people. Half the country, half the world, I should say, doesn't like that policy, including China, Mexico, the Middle East, lots of places that we sell our ag products. We end that stupid foreign policy. We start negotiating better trade. World agriculture could be a whole lot more bullish. And if energy prices stay down, it could become and the dollar dives even further. Agriculture could see a bull market that lasts 2 or 3 years, but not until these trade wars are over. But boy, I think that there's some positive news just around the horizon. And think about it. The United States has such a huge trade deficit with the rest of the world. Other countries would be foolish not to end these trade spats, because where the United States imports so much more from the other countries than we export, it's going to be a huge benefit to those countries to end these trade wars as quickly as possible. We'll see who's smart and does that. I think Mexico might be one of the first ones, because we're right next to the United States. They need corn, they need product. And I mean, they're foolish to try and win a trade war against a country that they export 3 times more to than they import. China's in the same situation. We end this trade war with Mexico and China. U.S. agriculture is going to become very, very bullish. Question is, how much pain do we have to suffer in agriculture before that happens? There will be some pain. We've already seen a little bit of it. Wow, nothing compared to the pain that uh, some of these manufacturers that make everything in the rest of the world. Walmart might feel a lot of pain because they import most of the things they sell from China. Apple, a company that makes everything that they sell in the world outside the United States, might see a big problem, especially in their US market. Nike, a company that makes everything outside the United States and markets a lot into the United States, obviously is seeing problems. Those countries that make everything that they sell outside the United States is obviously going to have a problem during these trade wars. So it's interesting. I think there's going to be insourcing taking place. Countries that, as businesses, stocks that will benefit will be those that produce primarily in the United States. And agriculture is definitely in that category. We produce everything inside the United States very efficiently, highly productive farmers, and we have a high quality product. When this trade war is over, I think agriculture could do very well. Probably not until then. Interesting to see the impact of these trade wars on markets. Big impact on the outside markets, U.S. stocks, especially those stocks that produce everything that they sell outside the U.S. Could be very interesting. Next week's reaction will especially be interesting. I'm interested to see how the U.S. dollar reacts to this because we had one negative day and actually one positive day. So a lot to think about this weekend. Hope you have a great weekend as you contemplate these changes, and good marketing.